Right, David Garrity joins us now to talk more about tech earnings and what to expect when other tech companies report later this week. David is principal with GVA Research. David, welcome. Let's start, why not, with Netflix. What did you think of the earnings report, and what do you think of the stock at these prices? Would you buy it?
I mean, Netflix was down about 25% off its high, and we think that the fact that the stock was trading up after hours, or pretty much bringing just in-line numbers, basically lets us know that the correction in the stock, we think, for the time being, is halted. One question we have about the $2 increase for new customers is this a charge that's going to be passed through to cable providers as the issue of net neutrality becomes more significant here in the U.S.? Relative to whether we buy the stock right now, we still think it's fairly expensive, so we would hold off for the time being.
All right, David, we have a lot of tech earnings coming out this week and big names that everybody always looks at. We have Apple and Microsoft on Wednesday and Thursday of this week. You have a buy rating on both of these companies. What do you like about them? And if an investor had money, new money to put to work, which one would you choose?
We'd put new money to work in Microsoft versus Apple. We think, one, in the case of Microsoft, we have a new CEO, Satya Nadella, who was in charge of their cloud computing business, an area that the company is going to accelerate the growth in. Investors really don't know Satya Nadella as of yet, and to the extent he's been leading the highest growth areas in the company, we think there's a lot of positive news to come from this first conference call that the new CEO is going to give us on Thursday after the close. And from that standpoint, we think there's a lot of upside potential in Microsoft nearer term. We think the stock basically gets up to $48 looking at over the next 12 months. Apple, on the other hand, while it's obviously been a significant innovator, the new iPhone 6 isn't going to come out until the end of September. They're going to have to fight their way through the product transition, which we think makes the stock perhaps a bit sluggish near term.
Let's talk about Facebook. What do you like? What do you not like about it?
Facebook, I mean, near term, the trends in terms of their driving more of their revenues from mobile most likely continues. That number had been north of 60 in the last quarter in December. We think it gets over 65 in March. But the issue we have against Facebook is that management seems to be rather cavalier in terms of how they're using their stock and their cash to go out and bid up businesses such as WhatsApp and also Oculus VR, both companies where they've spent basically collectively $21 billion for businesses that aren't really making any money as of yet, and in some cases don't really actually have any revenues.
All right, David, tell us about Amazon. It's reporting on Thursday. The stock is down a little bit from its peak. What's your feeling about Amazon and the stock?
Right. In terms of Amazon, I mean, obviously we're looking at a quarter here where the company's going to have earnings of about 15 cents a share. This will be the second quarter in a row where the company's been profitable. Some of the concerns about Amazon has been, since we've seen weaker economies overseas outside the U.S., is Amazon going to be able to make their 20% year-over-year revenue growth with revenues about $19.5 billion? If they don't get that, stock obviously still trading at a fairly high multiple, could be vulnerable to a further pullback, but we've already seen a correction of about 20% off of its 52-week high.
David, thank you so much. You really took us through a lot there. We appreciate it.
Thank you.
David Garrity, GVA Research.